Welcome to the channel, guys. My name is Jess. So another week has passed as Bitcoin continues to struggle against key resistances on both the high time frame and short time frame charts. On top of this, we're also seeing warning signs in the recent developments in price action that Bitcoin is due for another large correction back downwards. So let's dive into the video today to unpack all the recent price action, including the weekly candle close, the short time frame structure, and the daily candle close. Before we get into all that though, make sure you guys smash that like button and subscribe to the channel to get regular Bitcoin analysis every Monday, Wednesday, and Saturday. If you're after even more content, be sure to check out my free Telegram for daily updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trades with exact entry points, targets, and stop losses. Alrighty guys, welcome back to the channel. So we're going to dive right into the charts here on the 4-hour time frame, and let's go ahead and talk about what on earth has happened in the last couple of days and everything that's developed over the last week. So over the last 7 days, Bitcoin on the short time frame had started to consolidate in a descending channel pattern. So after that massive rally that we had following the huge crash last week on Monday, Bitcoin went to rally up to retest this level of resistance here at around $63,000, and that is when, or the beginning of when, we started to form what became our descending channel over here. So over the last week, we ended up validating it by forming 2-3 more points of validation, and just last night we retested that upper trend line once again and saw a rejection after failing to flip momentum to the positive and breaking out of the corresponding RSI downtrend over here. On the daily chart, we can see that this has led to another daily candle close, rejecting off this high time frame level of resistance at around $60,000, right? You guys can see that right there. And consequently, all of this had led to quite a really interesting weekly candle close. So in my last video, we spoke about that weekly candle close, the prior one, and how we really needed to see a green weekly candle close in the week following, so the close that we've just had this morning, in order to confirm the formation of a bullish reversal pattern. And on top of that, to make it a high confidence reversal, we needed to see Bitcoin break above the midline of our macro structure here, which has historically acted as a really strong dynamic level of resistance, wherein when we break above on the daily time frame, we generally see a retest to the range high level of resistance within that macro channel. So unfortunately, in the last week of price action, we can see those repetitive rejections there from that midline, that dotted blue line that we have here, and that has eventually led to this next weekly candle close being actually a red one. So let's go ahead and dive into our analysis. Let's start off by unpacking this weekly candle close and what it means, and then diving into our short time frame charts and talk about the warning signs that we have there for a large correction to the range low here at $54,000 to $55,000. Before we get into any more analysis, so guys, let's hear a quick word from our sponsor Bitunix, where you can get 15% off all of your trading fees and up to $5,500 in sign-up rewards by creating your free account using the link in the description box. Bitunix is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio or by using the code 1GG3 when you create your account. So taking a look at this next weekly candle close that we have just had this morning, clearly it was not the ideal scenario, right? Guys, we spoke about in that last video, following this, massive crash and a spinning top candle formation, what would be ideal is a strong green candle to signal that despite the massive amount of liquidations that we saw on both the bottom side and the top side, and the massive amount of indecision that we had in that market in that week, that the bulls were able to take control of the price action in the week following, and therefore confirm the formation of that bullish reversal pattern and send us into a macro high time frame, bullish trajectory. So unfortunately, what we formed instead is pretty much another spinning top formation. So it is not necessarily ultra bearish, because again, we can see that both the bulls and bears have temporarily held control of the price action to just, finally close that candle in a state of relatively neutral price action. It's just neutral. There's no massive bearish implications and there's no massive bullish implications, because we've seen that, despite the fact that we've had a massive amount of long liquidations to the bottom side here, we still had that push upwards. So it's not necessarily that, you know, there is no hope and we are genuinely due for that large correction now that we've seen that red candle. It is not what that means, but it just means that, you know, following that 2-week long period of 2 spinning top candles, we now kind of approach this next segment of price action with a little bit more caution. We did not get confirmation of a bullish reversal, nor did we get a candle that is any sort of warning sign at all. So that brings us to then the short time frame analysis, because if the weekly candle is telling us that on these shorter time frames, you know, we've got a lot going on, but nothing of actual significance, then we need to move on to the shorter time frames to talk about, you know, what is going to be significant there and what is going to change the trajectory of the macro charts. So moving over into the short time frame charts, we're on a 4-hour time frame here. What we're really looking for in terms of the shorter time frame charts is whether or not we're going to see a warning that we're about to enter a larger correction that sends us to the range low of our macro structure here, that base of that massive descending channel, or whether or not we're going to see a break of our key high time frame resistance, which is the midline of that channel, that dotted trend line, as well as its corresponding horizontal level of resistance here at $63,000. So 2 levels that we're kind of looking to break, and that would also send us above the 200-day moving average, which has historically represented the macro uptrend. So if we break above the midline and we break above our horizontal level of resistance, we are not only very likely to reestablish that range high and see that retest, but we are also back in a macro uptrend. So it sends us into a bullish trajectory and tells us that, you know, we have a high probability somewhat of a high probability of, you know, entering that price discovery, which is obviously very, very far away. The least that we want to see right now is just a break of the midline of that channel. So on the short time frame, we can see that we've been traveling in a very similar sort of structure, a descending channel as well. Again, we've entered into it from the bottom side up, telling us that generally we have a much higher probability of an upwards break in comparison to a downwards break below. So in that upwards break, the measured move of our descending channel is the height of the flag, or the height of the channel. And so that is about this much. And if we apply that to the breakout point, which I assume after another retest of range low, just in worst case scenario, let's say we get a range low retest once again, before we finally see that move above the upper trend line, that breakout there takes us to around $64,000 if we just mark that using a green line over here. So that breakout should, if it's the full measured move, take us not only above the midline resistance, you guys can see that dotted trend line over here, take us above the midline resistance, above our short time frame bullish trigger resistance over here at $62,000, and also above that high time frame resistance that we have on the daily chart, sending us above the 200-day moving average and our daily close bullish trigger. So naturally, that would be an exceptionally bullish case scenario, guys, right? The only problem with all of this is, what if we do not see that break? So we know that from the recent price action, we have just had a rejection from this range high resistance here, right? We've had that corresponding rejection from the RSI downtrend, telling us that Bitcoin, as of right now on these short time frame charts, should be continuing in that bearish trajectory. And we've seen that so far. We've moved below that resistance level over here that we were unable to sustain above at 59,800, that bullish trigger that we were rejecting off over the last couple of days, fell right back below that level of resistance to retest our short time frame support here at $58,300. So after losing the support, what Bitcoin ends up doing is falling down into this next liquidity zone here that we can see between $57,000 and $56,000. Now, the problem with this area of price action below this red line here is that we enter the high time frame bearish zone. And the reason why it's called that is because if we go back to the daily chart for a moment here and we pull up the liquidity swings indicator, we can see that this is that exact zone we're talking about, right? Below $56,500, we enter this liquidity zone, wherein if the price candle or daily candle closes below this area, we become at a real risk. We experience a real risk of really moving further to fill the rest of that volume gap and seeing a range low retest over here. That goes as low as $52,000, guys, right? If we look at the very bottom of that volume gap, that's at $52,700, which would be a much larger drop for Bitcoin in comparison to where it is right now. That would be another 9% drop. And moving into that region, if we fall below the end of that liquidity zone and the sell side liquidity at 53,500, that is when we move to the next level of significance and move to test the sell side liquidity over here of that most recent range low retest all the way down at 49,000 or 48,900, right? Which is, as you guys can see, an absolutely brutal and a massive drop. So obviously all that feels very, very far away right now. I mean, Bitcoin's sitting at 58,400 and, you know, a retest of 49,000 is quite far away. That's a very, very large assumption to make purely based off the fact that we have one bearish high time frame zone. However, if Bitcoin does move into this region, if we lose our short time frame support, and support is support until it's not. So there's no point assuming that that move is going to happen until we lose that base of support at 57,500. But if we do, and we enter this high time frame bearish zone over here, if we don't see a rapid bounce and Bitcoin does end up closing a daily candle below that bearish trigger at 56,500, that becomes a very real scenario. That bearish case really enters the scenery there, and it's quite likely then that we see a range low retest rather than a breakout of that descending channel and a move above to $64,000. So definitely lots to be looking out for, guys. But in terms of the break, because we are at support right now, there is a potential that we do end up bouncing here, and this is where we end up breaking from. The first thing that we're going to be looking for is that RSI trendline break, because as we approach this descending trend line of resistance, we are not going to be able to break above that trend line unless we see enough of a positive shift in momentum to suggest that enough buyers are stepping in to, you know, give us enough bullish strength to do that. So if we're going to see these continued rejections over here from that descending trend line, representing decreases in buying pressure and increases in selling pressure, there's no way that as we approach a level of resistance, particularly that midline resistance being so strong as it has been, we're going to see that move above. So definitely keep your eyes on the RSI trendline and see how the price develops. Moving down into this range over here, again, support is support until it's not. So this lower trendline that we've seen at the base of our descending channel has acted as a base of support this entire time, as well as this liquidity zone here. So what we saw over here, if we do end up moving into the base of that liquidity zone at $56,000, we can see a peak in the VPV and a gap right below it. So what we might do is move on to flash below to fill that volume gap, sending us just above $55,000, so around $54,800, before wicking it back above, closing back above that lower descending trend line, and before making that recovery back up to the range high. We saw the exact same thing here, guys. We had a move right below the end of that liquidity zone, a flash below, and then that recovery back up. Alrighty, guys, that is all the analysis that I have for you today. If you enjoyed the video or you learned something, don't forget to smash that like button and subscribe to the channel. If you're after even more content, be sure to check out my free Telegram for daily Bitcoin updates, as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trading setups with exact entry points, targets, and stop losses. And if you are a trader, don't forget to sign up down below to Bitunix to get 15% off all of your trading fees. I'll catch you guys in the next one. Bye.